February 1st, 2023. This is the 2000 tick chart on the Emini S&P on the Thinkorswim platform. This is what the chart looked like today, and this is what the chart marked up with my lines. I actually didn't trade that much, if at all, today. I only took one trade, but I was actually busy taking care of other things. So these identifiers and lines are kind of drawn after the fact, kind of toward the end of the day. So I didn't get to see these in real time. So definitely, I mean, it's hard to say that I would have taken these trades or not, because in real time, you kind of are in the flow. But after the fact, it's easy to say, well, obviously that I wouldn't have taken that trade because it wouldn't have worked, or I would have taken that trade because obviously it's a good entry. But in the moment, in real time, it's a lot different. So these trades are marked up. Just keep that in mind. And here we go. There were two catalysts today. One was the Manufacturing PMI, which came out at 7 o'clock Pacific Standard. And then, of course, the FOMC rate increase, which was everybody expected to be a quarter point, which came out at 11 o'clock Pacific Standard. And then Jerome Powell comes out and starts talking at around 11:30. So usually during these times, the market will whipsaw and do a lot of crazy things. Sometimes the price action won't really respect the rules or respect what you think is going to happen. So if you try to look for second entries or any kind of pullbacks or reversals, you might get stopped out just because it's so choppy and things could just be very hard to actually get a handle on. So it's a wise decision to kind of not trade around these areas, just because you could get lucky, get a lot of money, or you could also get smashed pretty badly. So let's go into the chart now. In the pre-market, I saw this, well, I saw this after the fact, of course, because I didn't trade most of the time. I saw a potential trading range, and then as the market opened, it kind of started creeping up. Now, this is right here, right where the jobs openings and the PMI report. You could say there's a second entry long here as soon as it breaks above, but just keep in mind that this is the top of the trading range right here. So it'd be a little bit risky because you do have a breakout and it looks like it's pulling back into this trading range. So to take an entry here would have been, I think, pretty risky, even though there's a very big bullish bar. And if you drew, like I did, this trend channel, I guess you could have put it a little bit higher, but I kept it lower, saw it as an overshoot. It might overshoot through the bottom, and it looks like it's coming back in. But in real time, I'm pretty sure I probably wouldn't have taken this trade. It just looks a little dicey. It's also right here where the Manufacturing PMI and JOLTs reports are being released. So it would have been risky and kind of a high, I don't know, pretty dicey trade in my opinion. But then if you count this as a double top, there is a first entry and a second entry. I marked this one as an aggressive second entry long, but there's only 3 minutes after the release of the numbers, but it is right close to the bottom of the trading range. So if the trade was taken, I think I would have taken it not here right where it broke above, but I would have just waited a little bit of confirmation just to see. So this is probably what I would have saw, because this isn't a very good signal bar. Well, this one is not a very good signal bar in the first place because it closed. It's kind of bearish, even though it's a bull type of bar because it closed in the upper section. But then this is a doji, and then this one wouldn't give me that much confidence. And if I were to take a trade, I'd probably put it one tick above here, or maybe one tick above here, just as a run to the EMA. And of course, it would have worked, and then it comes right back down. It chops, so it respects this bottom of the trading range some more. Prices move up. Doesn't quite make it to the top now. So in my mind, I would probably think at the time, okay, well, maybe it's just going to stay in this trading range, or it might actually break lower because you got a lower low, lower high, another lower high, and these are making lower lows. So in my mind, I'm thinking, well, it's probably going to break down. Then it goes back up. I do see a second entry short coming up. So it's the first entry short, and then this is the second entry short, and it is near the top of the trading range. Now, if I were to take a trade, I'd probably put it one tick below, but I think I would have passed this up because it's getting close to the EMA. EMA is pointing up, so you'd have to try to scalp out within this to be safe. And if you did take that trade, it would have worked. And then prices keep going down. Now it's breaking down through the bottom of the trading range, so you could see a potential breakout failure if it goes back in. Keeps going down, and then I would have drawn this trading channel, and as soon as this touches at the bottom, I would have probably drawn something like this, and this probably would have been lower. Again, I'm all speaking hearsay because I'm obviously looking at this trading chart after all this has happened because I wasn't trading in real time today. Prices would have went down, touched it a second time, and now a third time. So it's like 4 touches. I would have been pretty confident about the low here. And the high here might have been slightly lower, let's say about there. I'm not sure. But I probably keep it a little bit higher because I don't like to have it low here and have it overshoot so early in the game. Prices would have moved. And then it's getting back, and then now it breaks above the EMA. I don't see any really high probability trade here. You could draw a line here and say there's support, and there's probably 1, 2, 3, 4 touches to give you confidence it's going back up. But what the market's telling me right now, it's kind of in a trading range and trending down. So I would have left that alone. I do see a failed second entry short. So it could be first entry short, second entry short. Now, I don't think I would have had this trend line trading channel in place yet. But if I saw this, I would have seen a first entry short right here, second entry short, and then as soon as it broke 1 tick below and it reversed, I would have thought maybe there's a trade here. If you put 1 tick above here, maybe it'll come back to this trading range and go back in. But it is kind of played out a little bit because it's been a little bit of time since it's broke out. So I consider that kind of it would have been an aggressive trade. But then if you wait another tick, now you see a higher low. So this higher low would have given me confidence because I think I might have established a trading channel at this point. But this higher low, plus this is a bullish bar. I like these type of bars, and it closed above the EMA. And this higher low closed above this guy. So I think I would have taken a trade here, probably close to maybe at 40.71, and hope that the next bar here would pick me up. Turns out it would have picked me up just barely, and I would have been able to write it up. Probably got my scalp, and then I'd move my runner, chase it 1 tick below these guys. So far my runner would have just kept going. This would have been a good trade. And I think right here, my runner would have been just about right here, 40.76. And very likely, I already know what's going to happen. I would have been able to go up, drag it up a little bit more, and probably got stopped out right around here. So it would have been a pretty decent trade with a runner. I call that one probably a pretty good high probability trade, in my opinion. And then now it confirmed this guy here, and since it confirmed 3 times down here, I would have been pretty confident that the market is going lower. And prices do go low. I would have drawn this trend line and going down. Looking for a test of this bottom channel. Goes down, doesn't touch, but does make a new low, comes up, goes above the EMA. Now there's no real trade here. You could count very distinct, like, okay, there's a first entry long, there's a second entry long, and it's a failure, but it's already far from the EMA. This is very choppy, even though it's gradually grinding down. There's no real clean setup I would take. And so it just chops around. Now it's in a trading range. Breaks out and it comes back in, but it's pretty strong. Looks like EMA is holding now. I don't see any good trades. You could consider this a second entry long here, but it's a little early, in my opinion, to say that I'm going to take a long here, even though it's second entry. This signal bar isn't the best. EMA is here, but remember, even though it's being supported now, it was acting as resistance just prior. So prices kept moving up, and now it touches the top of this trading channel again, and it's coming back down. So I do see a second entry long here. So I see a first entry long, 1 here, second entry long here. I would have drawn this trading channel at this point, probably cut it through, count it as an overshoot, but I wouldn't take a second entry long after an overshoot because it might overshoot through the bottom. I mean, there's a trade there potentially, but I marked it, but I'm pretty sure I wouldn't have taken it. Turns out it would have worked, like this would have held, and this overshoot, even though it was an overshoot, it was the support down here held. But you're getting pretty close to the FOMC interest rate announcement, which everybody and their mother knew that it was just going to be a 1/4 point. But that's kind of getting dicey now. And as you can see, as soon as it was released, things are going every which way crazy. Like you could try trading this, but if you went in with discipline, with correct stop losses, your chances of getting hit on your stop loss is very high, just as high as you potentially getting your profit target. So it'd been pretty much a gamble. And I don't really want to try taking those attempts because it might work once, but to consistently have it work is going to be low just because it's very emotional during this choppy phase. So it's chopping like crazy. It's hard to trade this confidently unless you just said, I'm entering with no stop loss, or I'll just put a mental one, but mental one's easy to slip away from you because there's no telling that this trade, these price targets couldn't have just kept going way, 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 way down. Or let's say you took a short, doesn't go way, 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 way up. I mean, look at the size of these candles. And this is just a lot of emotion happening right now. There's no reason to try to take these trades. There's easier trades and easier setups later. So it keeps chopping. This is where the J. Powell press conference comes out and just the market's just listening. Comes out at around 11:30 Pacific Standard. It's right here when he comes out, starts talking, takes questions. Right now the market doesn't like it. I mean, you could say see some second entries or failures or whatever, but this is just, remember, this is very, very noisy. It's better to just sit it out, which is what I did. Well, I wasn't around, but yes, kind of just sit it out. Goes up. It's testing this trading channel, which is good. So it's like this crazy overshoot. It's coming back down. It's respecting it. Then it decides to just start running. It starts running up. So it's hard to say there's an entry here because he's still in the middle of talking. There's only 5 minutes of him talking so far, and he usually comes out for a good 45 minutes to an hour, and it just keeps going up. I don't see any clean entries or any safe entries to take. Now, when I do see one is right here. It's like first entry, second entry long. This, I think I might have taken if I was present and aware, just because this signal candle does close above the EMA. It's clearly in a bullish trend. The market likes what it hears. And it turns out it would have worked, but that's just like a hypothetical I would have taken, but I woulda, shoulda, coulda, but I wasn't around. So it chops around. Now, if you look here, it's respecting the EMA now. You could say here, it's a first entry, but then it makes a new high. So now it's a second entry. And there's no real clear entry to take right now. And of course, it just goes without you. Keeps moving up. Now, what I'm noticing now is it's respecting this 41.25 level. It hits it once, twice, 3 times. I'm getting very interested now. It touches it, well, depending on how you count it, I can consider it a 3rd time. It's coming back down. It's respecting the EMA. Goes down to low, but it comes back up. So it comes back, it touches this 41.25 a 4th time or a 5th time, however you want to count it. Let's just say it counted it a 4th time. I decided that I'm actually going to take a trade here, even though EMA is flattening out. So as you're going to see, it goes down. It's respecting the EMA. It comes up right here, breaks out the first time, and it keeps going. It comes back down. So I'm still sitting on my hands. I'm watching this, watching the EMA. It's broke through now. So I know there's a breakout pullback. I'm wondering if it's going to break out the bottom. It's very strong. It doesn't. It just breaks out barely. And then this signal bar is pretty terrible. There's no real trade here. It breaks down below. It's just chopping like crazy. And every single time it comes back and it touches this 41.25. So look, it touches 1, 2, 3, 4, 5, 6, and it broke through the 7th time. So I'm watching. It does it a 2nd time. This is a very, very bullish candle because if you look at this, this is a candle that it opened down here, does a bunch of stuff. It closed way up here. This guy, it does the same thing. It closed right where it opens. A 2nd time, it closed right where it opened, but this time it didn't go down as low. I get anxious and I decide to put a trade 1 tick above because I believe that if there's any people that went short, they probably put their stop here. If they're super ambitious, they probably put their stop way up here. But most likely they would just want to put it right here because they think it might be a breakout. And if it breaks out, they're probably just going to abandon the trade and cover their shorts. And so there'd be a lot of buying power. So that's what I do. I put 1 entry right above, and that's where I get filled. So I just show you the 1 trade that I took. I put it at 41.25. I actually got a better fill because I actually had it here. And when it spiked up, for whatever reason, it filled me a little bit cleaner. And I was actually pretty happy. I was like, oh my gosh, I got a really great fill because I think I put it right here, 41.25, which is just touching here. It might have triggered, but then in this, remember, there's 2,000 trades in this tiny little candle here. 2,000 trades. So it went up, it did a lot of crazy stuff. It got me a better fill, which I'm not going to argue with. I read it up and I start piecemealing out the trade. So right here at 41, 24, 25, I took 4 points, then I took another 5 points, and then the last one was a runner. I drag it up. Actually, I took it out right here at the same time. I apologize, I misspoke. But anyways, it keeps going up, and at this point, it's pretty much entering the last hour. There's no clean second entry setups that I could find. I mean, there are some sketchier, iffy ones, but I just decided, okay, I'm not going to do it. And it's getting close to 12:30. It kind of moves up. And at this point, I do have this drawn because when this touched 1, 2, 3, I drew this, but then I drew this kind of high. I wasn't sure if it's actually a little bit lower, maybe let's say right here, and had an overshoot, but I didn't really want to have the overshoot, so I just kept it right there. And then prices just kept going up. Doesn't really respect this top of the line because it breaks out and just kind of just goes without you. Then toward probably the last 17 minutes left, it breaks down and then it kind of comes back, does a lot of choppy stuff. But my one and only trade, I just decided, okay, well, I should be careful. I wasn't here most of the time to get into the flow of trading. And it's just the one trade that I got that was profitable. I'll just count my blessings and just be happy that it worked out. I mean, there were a few entries here, like this one here, I thought would have been pretty good, and then probably this one would have been pretty good. So maybe 2 high probability trades, other than this one that I took off of a characteristic, like a hunch that I've seen set up in other ways. It would have been better if this overshoot didn't happen. If it just kind of like everybody piled up here and it's just consolidating, I would have felt a little more confident if I took an entry here because I've seen other setups where it just kind of wedges upwards in a bullish pattern. But this one was a hunch trade for sure, and I took it and it ended up working well. Because you could say maybe your chart shows a first entry short, maybe a second entry short failure, but my chart didn't quite look like that. It only had a first entry short, but it was kind of creeping upwards. So that's kind of how I saw the charts today. It was definitely a lot of opportunities. No, excuse me, I take that back. There, if you got in on the right trade, there 1 or 2 opportunities you would have got probably would have just made your day. So that's how I saw it. Hopefully that's helpful. If you're looking for the exact trades or anything else, there's descriptions at the bottom.